In the last class, I told you about the explanations of trading account. Now, today we are going for the profit and loss account as well as balance sheet. Whatever it may be, the gross profit that we come across in trading account, it should be transferred to profit and loss account. In the same way, whatever it may be, the gross loss that we come across, we have to take that and we have to show that in the profit and loss account. Okay. Now, after taking into account the gross profit or gross loss, whatever it may be, okay, we have to take into account the indirect expenses that we come across, as well as indirect incomes. Indirect incomes, I told you already that they are the incomes that we will get apart from the incomes what we are getting from the business. And some examples of indirect incomes: discount received, commission received, rent received. All these things are nothing but the indirect incomes that we come across. Next, similarly, when we go for indirect expenses, salaries or salaries and wages, printing and stationery, postage and telegrams, okay, advertisement, all these things you will come across, bad debts, all these things. And one more thing we have to keep in our mind at this context is, okay, in your problems you'll come across provision for okay, for bad and doubtful debts, provision for bad and doubtful debts, all these things you'll come across. Okay, provision for discount on debtors, all these things you'll come across. When you come across all these things, how to rectify, how to enter those things, it is very, very important. When you come across bad debts in the problem, apart from the bad debts that we come across in trial balance, whatever it may be, the bad debts that we come across, first of all, we have to show that. And sometimes when suppose when there are no bad debts in trial balance and when they are given separately, you can show that in profit and loss account debit side. Suppose when we come across bad debts in trial balance and again separately, then we have to see which amount is more and which amount is less. Suppose if the trial balance amount is more than the adjustment amount, okay, then whatever it may be, the difference that we come across, we have to show that on the credit side. And whatever it may be, the amount that was given in the adjustments, it should be deducted, okay, from sundry debtors in the balance sheet on the asset side. Okay, this is separate. And if you come across bad debts in trial balance, directly you can show that in profit and loss account on the debit side. After this, you'll come across provision for bad and doubtful debts. Okay, here everyone they will have some confusion. What confusion, sir? Suppose if provision for bad and doubtful debts, if they are given in trial balance, what we have to do? Okay, this provision for bad and doubtful debts, whenever you come across in trial balance, they'll appear on credit side. Mind it, they'll appear on credit side. So what when they are given on the credit side of the trial balance, and when you are not having any amount in the adjustments, directly you can show that on the debit side of profit and loss account. Suppose if you are having some provision for bad and doubtful debts in trial balance, and again if you are having provision for bad and doubtful debts in adjustments, then okay, the how to treat this, in what way we have to show this. First of all, we have to see whether the trial balance amount is more or the adjustment amount is more. When the trial balance amount is more, okay, whatever it may be, the difference that we come across, suppose if they are more, whatever it may be, the difference that we come across, you have to show that on the credit side. Suppose if the adjustment amount is more than trial balance amount, whatever it may be, the difference you have to show that in profit and loss account on the debit side. The first case you have to show that on the credit side of the profit and loss account. In the second case, you will come across the difference amount on the debit side of profit and loss account. And you are given bad debts and adjustments, provision for bad and doubtful debts, and along with that, you are given provision for discount on debtors. So, in this case, what we have to do? First of all, we have to take the sundry debtors and you have to deduct the bad debts that was given in adjustments. Then, after getting the net amount, you have to calculate what is the provision for bad and doubtful debts on the net amount, and that amount you have to deduct. And again, you will come across one more net amount. On that net amount only, you have to calculate the provision for discount on debtors. Generally, in problems, they will give you in percentage. In percentage, they'll give you. So you have to calculate the percentage on the net amounts and then only you have to show that on the debit side of profit and loss account. Okay, this is the main adjustment that we come across when we go for profit and loss account. And one thing, every person they'll get confusion over here. Some people they'll go in one way and some people they'll go in another way. Okay, some people what they'll do is they'll show the old trial balance amount, whatever it was given on the debit side, and they will show the right side the new amount. Like that also you can do. No one is going to object that. No one is going to object that. But thing is, every person they'll get confusion in this provision for bad and doubtful debts. And that thing, if you can able to do that and if you can able to understand that clearly, then there won't be any problem for you to prepare the profit and loss account, because all direct incomes you will show that on the credit side and all direct expenses you will show that on the debit side. And one thing is, some expenses you will come across outstanding amounts and prepaid amounts. Okay, and when you come across outstanding amounts, you have to add that to the concerned expenditure account. And when we come across prepaid expenses, that thing you have to deduct, and the net amount only you have to show in the outer column. These things also you have to take into account. Then, after that, depreciation. This is very, 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 very important. I mean, just understand how many varies I just kept, because depreciation is compulsory that you will come across in profit and loss account. What is depreciation? Wear and tear amount is nothing but depreciation, and reduction in the value of the asset is nothing but depreciation. And we are going to study this depreciation in the other in coming classes. But at present, what we have to understand is whatever it may be the depreciation that we come across, you have to show that on the debit side of profit and loss account. And you may ask me, sir, whether depreciation will come for current assets or fixed assets. Keep it in mind that depreciation will appear on fixed assets only, but not on current assets. For example, depreciation you will come across on furniture, land and buildings, plant and machinery, all these things, the motor cars, vehicles, all these things you will come across depreciation. But don't be of that opinion that depreciation will appear in current assets like closing stock, debtors, bills receivable, all these things they are nothing but the current assets. So don't be of that opinion that you have to go for depreciation on current assets. Okay, now whatever it may be the loan amount, I'm going talking about loan amount. Whatever it may be the loan amount, suppose they won't pay, compulsory you have to pay that. Similarly, interest on loan. Interest on loan will appear on the debit side of profit and loss account, whereas interest on drawings will appear on the credit side of profit and loss account. This thing you should not forget. Interest, once again, I'm repeating. Interest on capital will appear on the debit side of profit and loss account, and interest on drawings will appear on the credit side of profit and loss account. Okay, like this, you'll come across some adjustments regarding this profit and loss account. And if you are thorough with these adjustments, if you are thorough with these expenses, whatever it may be, you have to, you can prepare, not you have to, you can prepare the profit and loss account without any difficulty. In a casual manner, you can prepare the profit and loss account. Okay, fine. Okay, now I am going for balance sheet amount. So, what is balance sheet? The financial status and financial position of a business is nothing but balance sheet. Okay, and it may be a sole trade business, it may be a partnership business, it may be a joint stock company, or any multinational company, whatever it may be. Okay, compulsory, you have to prepare the balance sheet. When you can able to prepare the balance sheet, then the people they can able to understand your financial position, whether this business is going to continue or it is going to be stopped. That thing people they have to know, and they will know by preparation of this balance sheet. Okay, now preparation of this balance sheet. When we go for preparation of this balance sheet, you have to understand, okay, what items will appear on the asset side and what items will appear on the liability side. I had given already on the board in the last class. You will come across cash in hand, cash at bank, all these things you will come across. And one by one, the current assets. One by one, the current assets. And after that, you will have the fixed assets. There is no hard and strict rule that you can prepare in any manner. Okay, because there are two types of preparation of balance sheets. Okay, according to your will, first one, and according to your permanence. According to your permanence. So what do you mean by the first one and what do you mean by the second one, sir? According to your will means you can show, mean as fixed assets in the beginning and current assets and cash in hand at the end, or you can go for cash in hand in the beginning and you can show the fixed assets at the end. But on the basis of permanence, compulsory you have to show the fixed assets first. Compulsory you have to show the fixed assets, then only you have to go for current assets and all other miscellaneous sorry, all other miscellaneous assets that we come across. Okay, when we go for assets, how many types of assets that we come across? Okay, when we go for assets, we'll come across fixed assets first. What are fixed assets? Fixed assets are those assets which will help, okay, in the business. You can take land and buildings, plant and machinery, leasehold property, freehold property, all these things they are termed as fixed assets. Even sometimes goodwill also we have to take as a fixed asset because it will assist a business to earn profit amount. So first of all, you have to show the fixed assets. Then you have to go for the current assets. What are current assets? Okay, current assets you can call in another manner as fluctuating assets. They are not stable. Okay, they are not stable. They are not fixed in nature. They will change every time, basing upon the transactions, basing upon the things that you come across. They will change. So you must be very careful about this. You must be very careful about these fixed assets. Okay, Floating assets. Next, tangible assets. What are tangible assets? Tangible assets are those assets which we can see with our naked eye. For example, furniture, plant and machinery, land and buildings. Okay, all these things you can see with your naked eye. That is nothing but a tangible asset. Intangible assets. Okay, intangible assets are those assets which we cannot see with our naked eye, but we can feel. That is the peculiarity that we come across between tangible assets and intangible assets. Intangible assets are those assets which we cannot see with our naked eye, but we can feel. Okay, so that is nothing but intangible assets. So, can you please give me goodwill, patents, trademarks, all these things we can group under this intangible assets. Next, fictitious assets. Fictitious assets. Okay, they are very fictitious in nature and they must be eliminated as far as possible. They should be eliminated, they should be removed. So that type of assets we'll call them as fictitious assets. And after that, wasting assets. Wasting assets, some assets they will appear as wasting assets. Okay, wastage or wasting. So those things compulsory up to a time period, up to a time lag, you have to show on the asset side of the balance sheet, and after some time these wasting assets they will go away. So like this you will come across asset side. Coming to liabilities. Okay, coming to liabilities. Liabilities are nothing but the amounts that we have to pay to outsiders. So when we go for liabilities, okay, how many types of liabilities will come across? We'll come across three types of liabilities. Three maximum three. What are they? Fixed liabilities. Fixed liabilities are the liabilities which we have to pay compulsory. There is no option, there is no concession, there is no compromise. You have to pay. And current liabilities. Okay, like current assets, these assets, I mean these liabilities also they will change. These liabilities are also they will change basing upon the payment that we will make. And the third category is contingent liabilities. Contingent liabilities are nothing but they appear as liability, but actually they are not liabilities. They appear as liabilities, but they are not actual liabilities. Like this, you will come across contingent liabilities. Okay, fine. Okay, with this, I am closing this profit and loss account and balance sheet. And next class will I'm going